South Africa's financial sector is under intense regulatory scrutiny, with the Financial Sector Conduct Authority and Prudential Authority ramping up enforcement, particularly around AML, CFT compliance and executive accountability. Emerging areas like cryptocurrency regulation and ESG integration are adding new compliance challenges for institutions. Now we're joined live by Lerato Lamola, partner at Webber Wentzel, for her insights into these trends. Good afternoon, Lerato, and thank you for joining us. How are South African financial institutions adapting to the increased executive accountability demanded by FSCA and PA in 2025?
Good afternoon. So what we're seeing in the market is financial institutions really just reviewing their internal processes. I think the actions by our various financial sector regulators are forcing financial institutions to be proactive and preempt certain actions from the regulators.
Now, what steps can businesses take to avoid tick box compliance and meet with the standards post-grey listing?
Yeah, so I think the most important thing is that compliance needs to start from the top down. So governing bodies within financial institutions need to set the tone. From an AML perspective, there needs to be a review of their internal, what we call risk management and compliance programs. So that's the compliance standard that our AML legislation requires, as well as ensuring that all staff within the financial institution have a clear understanding of what is required of them, and ensuring that they know where to go within the organization when things go wrong.
How's the licensing process for crypto asset service providers impacting the crypto market in South Africa?
So South Africa is actually one of the few countries on the continent that has formal regulation around crypto. And as of December 2024, our regulator has issued 248 licenses. So that's 248 new players within the market, which does give comfort to consumers out there that now they know that the crypto players in the market that they are engaging with are regulated. However, a lot of crypto players are startup fintechs. And what this means is it will require a lot of internal work from them to get used to the financial sector legislation. South Africa has one of the most advanced financial regulatory regimes on the continent. So there is a lot to get your head around if you are a new licensed entity. But the main thing is to understand the risks in your business and ensure that you have protocols to address those risks.
Now, what are some of the biggest challenges for financial institutions in implementing the travel rule for crypto transactions by April 2025?
Yeah, so just for the benefit of the viewers who don't know what the travel rule is, so the travel rule is a rule that says the financial institution that is sending crypto must send the consumer details with the amount that they're sending to the financial institution that is receiving the crypto. And one of the attractive things about crypto previously is that crypto transactions could be conducted anonymously. However, the travel rule now requires that such transactions cannot be conducted anonymously. So for your traditional financial institutions, I don't think this will be a challenge. They've been implementing KYC for quite a while now. For your new crypto entrants who are still getting their head around what AML and what FICA requires, I think this will require a bit of adaptation to their processes and how they onboard their clients. So making sure that they have all of the details of those clients so that when they are executing the transactions, they have enough information to provide the financial institution that is receiving the transaction.
How can firms prepare for the regulatory scrutiny of decentralized finance platforms given their current unregulated status?
So I think just understanding the risks. Currently, as you've noted in South Africa, we don't have any formal rules around decentralized finance. So right now, I think financial institutions just need to get their head around what are the risks that these new platforms pose, and where. So for traditional financial institutions, when they adopt new forms of providing financial services which are not regulated, they are still regulated by their existing licenses. So they'll need to almost do a gap analysis to figure out what are the risks that decentralized finance would impose or raise on their existing licensing obligations. So it's really just about understanding what it is and what risks it poses to your business.
Now, what practical measures can institutions adopt to integrate ESG factors into their operations and avoid risks like greenwashing?
So similar to AML, it's a top-down approach. Governing bodies need to understand what their ESG risks are. They need to have processes in place to report or disclose their ESG requirements, as well as start recording and documenting where they are meeting certain ESG requirements.
And then how are regulators like the FSCA and PA balancing enforcement with fostering innovation in South Africa's financial sector?
That's a difficult one because innovation moves faster than regulation. But I think one of the things that our regulators have done well is they are collaborating, so they're speaking to each other. And they're providing various bodies where they are conducting research into the industry. So they are making an effort to try and understand all of the innovation that is happening in the financial sector, as well as providing sandboxes. So a sandbox is a project which the regulator runs where financial institutions who want to introduce new products or services which are not necessarily regulated, the regulator provides them with a safe space to test out their products and services. So allowing the financial institution to test their business case on the one hand, but allowing the regulators on the other hand to identify the risks that the regulator would need to regulate for.
Thank you so much, Lerato Lamola, giving us her valuable insights today from Webber Wentzel.